Good morning, everyone. So this is basically the video series that we are uh, creating for all you guys. It's going to be a free video series where we give you information about how you can trade individual currency indexes, or rather, I should put it that the way we could use individual currency indexes in order to determine which pair you're going to be trading. Now, obviously, if you're a new trader, then what we recommend is that you don't really look at these videos now, because we're not going to be really covering basics of Forex, because we are only going to be discussing various strategies that can be used, and the whole video series revolves around currency strength and weakness. So if you're a new trader, I recommend that you learn basics about Forex. There are some good websites. You can log on to babypips.com, and then maybe once you're completely aware of how the market works, then maybe you can switch over to these videos and then start using it. Okay, so as you can see here, this is basically the Light Forex demo account. And the reason why we use Light Forex demo is because I think most of the traders who have been using our strategies before, or who have visited our thread on forexfactory.com, would know that we've always used Light Forex because this is one MetaTrader broker which gives you access to individual currency index charts. Now, like we've always kept saying, that if you want to stay profitable, then it's really important that you focus on individual currency strength and weakness. Now, obviously, there are many ways to trade Forex. We all know that there are thousands of strategies. I mean, you name it, there is moving average, Ichimoku, MACD, RSI. Every trader has a different strategy. Everybody uses indicators in a different way. But the simple thing that we want to say is, be it any strategy that you're using, if you start applying currency strength and weakness principle to your existing strategy, you can still remain consistent. So currency strength and weakness will help you remain consistent. That's the whole goal here. So we're going to be discussing a couple of strategies, okay, and you will see that the strategies will help you in the long run. We will be obviously using our online customized tool. It's basically a currency strength and weakness tool, which we won't be discussing now. We will discuss it in a separate video. But in this video, just a basic introduction to currency strength and weakness, and maybe we can also discuss one possible way of using these individual currency index to understand how to trade better. Okay, so here you can see you have all your individual currency index charts. It's loaded with some basic indicators. In this case, it's only the MACD. So we're only using the MACD, and this, obviously, you guys know that these are nothing but moving averages, but these are shorter moving averages and longer, better known as the Guppy multiple moving average method. Obviously, you can play around with the moving average numbers, but then we use the standard Guppy principle. So you have the 3, you have the 5, you have 8, and you have it should be 12, and then you can use the 15. So you can use 3, 5, 8, 12, 15. Okay, these are your shorter moving averages, and then you can put your longer moving averages, which could be 30, 35. You can use 40, 45, 50, 55, and I even use a 60 here. Okay, so these are your shorter and the longer moving averages, and as you can rightly see, that this gives you a more clear picture of what an individual currency, in this case it's the New Zealand dollar, what it is doing. Now, as we all know, the standard way of using moving averages, basically you look at a crossover of the moving average, and when you see two moving averages crossing one another, it depends on which direction it is heading. Based on the direction it is heading, you basically think of whether buy or sell. So in this case, you can see here, since we are using multiple moving averages, right, we're also going to be looking at certain crossovers, right? But what's more important is that when you want to make a decision of which pair you want to trade, you will obviously be looking for a specific currency index which is actually moving opposite, right? So if the pound is going down, then let's say if the euro is going up, then you know that buying the euro pound is going to be a better option. Now, so let's take a look here. So basically, for for just introduction, these are smaller moving averages and longer moving averages. Now, basically, the way Daryl Guppy, who basically is the inventor, basically is the founder of this method, he he says that the shorter moving averages, you can simply call them as retail traders, right? So who are looking at small movements to make money, and these are the longer moving averages are your basically your longer term investors. Now, when you see a crossover, right, of your shorter and your longer term moving average, it basically says that you can see a change in trend, and you can expect the price to move in the opposite direction. But what is more important in this case is uh, it's not really about the cross. So it's not that you see a cross and you quickly jump into a trade. No, uh, it's basically understanding when to really enter the market. Now, in a typical case like this, let's say the recent example of the New Zealand dollar, you can see how the shorter term moving average started crossing over, right? And you can see all these longer term moving averages started to merge together, right? They start to merge, and they as if it's trying to change its direction. Now, this is when your shorter term moving averages cross, which basically tells you that there is a possible reversal, but then we don't really know. It could again fall back here, and then you have a retest of the longer term moving average, and then it starts moving up again. Now, this point here would be considered as a good entry point. So basically, this could be your intersection, right? This could be your intersection, and then you see a pullback where your longer term moving averages are now slowly, they've overlapped one another, and it's actually changing its direction. And post that, you can say that yes, New Zealand dollar is currently in an uptrend. Maybe it's a temporary uptrend. You never know. But then all we are saying is that a pullback and a move up is basically a better entry point rather than you trying to trade at this point here. Now, obviously, along with this, I personally like to use the MACD. MACD is, and I don't really use a MACD the typical way where when you look at MACD histogram crossing down, you sell, and when it goes up, you buy. So in a similar fashion, like here, this is a signal line, and you have the histogram. I always like to see the signal line and the histogram cross, and then you see a pullback here, where the histogram drops below the signal line, but then it doesn't really go below the zero. It tends to come back up again. These points here, this one here, even this to some extent, where you see the signal line right touching the zero, going up again. These points here, look at this point here, which directly corresponds to this, where this is a signal line cross, histogram pulls back, then again drops below the signal line. These points can be considered as more safer zones to be trading. Now, obviously, if you're looking at, let's say, the New Zealand right now, then you can see that the New Zealand at this point here is uptrend. So let's not look at what's happening shorter term. Let's look at it very generally. So New Zealand currently uptrend. Okay, let's look at it if there is any other currency pair which is moving opposites. The pound is uptrend. Simply looking at the charts, this is the US dollars. Been almost 4 weeks, not really been doing much. Yen, euro, to some extent, you can see that it was mixed, but then now started to open up a little bit. You can see how this is a histogram here, but it's been mixed for almost 4 weeks, now moving down. CHF is a clear downtrend, so CHF looks more like a winner here. CHF is in a downtrend. CAD is mixed. AUD, a typical move. You can see how it's crossed over, pull back and trying to move up, but nothing at this point. New Zealand. So New Zealand is an uptrend, uh, and the only clear downtrend was more to do with the CHF. So let's take a look at the New Zealand Swiss franc. There you go. Yep. And as you can see, it's quite clear that New Zealand Swiss franc has been in an uptrend. Right? The New Zealand Swiss franc is in an uptrend. Now, typically, if you only by looking at how currencies are moving, we are not really doing some special research in this. We're simply looking at how the currencies are moving, looking at shorter term, looking at longer term, and just seeing how it's progressing. Same example, let's say the New Zealand dollar. This is the crossover, and you had a slight pullback, and then you had a move down. This was in the second last week of Jan. So let's say New Zealand was in a downtrend. Pound was in a downtrend, we can say. Then dollar was not really doing much. Nope. Euro, yes. Nothing really in an uptrend. So New Zealand is down. Dollar, nothing really. The yen started to move down. Yes, so the yen was moving down. Now, as you guys know, in the light forex MetaTrader, the way the yen index is constructed, it's basically when you see the charts moving down, when you see this chart moving down, you're obviously looking for another currency which is moving in the same direction as the yen, right? So the way they've constructed the charts is a little different than how you normally read. So if you say in this case, if you want to trade the NSD yen, then you would want to see the NSD and the yen both moving down together. So let's say if we look at the NSD yen pair and look at how it behaved in the month of January towards the end. So here you have the New Zealand yen. You can see how it started to move down. So this is where the New Zealand yen was. You can see a nice pullback from the signal line with the histogram, and this was nice corresponding as well. So this was a crossover, pull back to the longer term moving average, and it starts dropping again, and the MACD is obviously behaving the same way the moving averages are. So this would have been a good entry to short the yen. Currently, if you look at it, you can see how this was a crossover, then there was a pullback somewhere here, and you had a long entry. And currently the New Zealand dollar is strong, so maybe it's the New Zealand strength which is actually moving the New Zealand dollar yen pair up. So in this case, all we're trying to do here is that we're basically looking at some moving averages, and we're just looking at how simple moving averages, the longer and the shorter, only by looking at directions of the currency pairs you can look for some good currency pairs to enter the market. So off late, if you look at the pound has been strong, the Swiss franc has been weak. So if we look at the pound Swiss franc, then basically we would have said to ourselves that we basically want to be trading the GBP Swiss franc. The reason being, we know that the pound is strong and the Swiss franc is weak. So what this method basically, it tells you, looking at currencies at a glance, that which is the currency pair you may want to look for an entry. So we're not saying that just by looking at, oh, the pound is strong, the Swiss franc is weak, let me just place an entry. No, but it basically tells you that which are the currency pairs in which you can look for an entry. This is the system that you're currently using. So maybe you're using I don't know, maybe an RSI system, or Ichimoku, or anything, any strategy that you're currently using. if you can apply this basic principle of identifying which has been strong, which is consistently strong, which is consistently weak, then maybe you can apply your strategy on that currency pair, and you would see a better result, right? So this is all the video is about. This is just a quick introduction on using some simple moving averages, and by looking at moving averages at a glance, identifying that which could be a good currency pair to trade. We will discuss more about this in the next videos, the coming videos, and we'll also be discussing about the main tool, which is your strength and weakness indicator, which basically tells you which currency to trade. All right, thank you. See you in the next video.